Hi friends, this is Gaurav Naik and I welcome you all to this YouTube video of mine. Today is 6th of April 2023 and this video is for 10th of April because tomorrow is a holiday, Good Friday. So first let's have a look at the technical and data and try to devise a plan for Monday. So first we'll have a look at the data. So if you see this is for the next week's option chain. Okay, highest call rating is at 18,000 anyway that is very far. So before that, 17,600 is having the highest call as well as the highest put. So there is not much option build up in this expiry yet. So this is change in Y. So if you look at the overall outstanding, 18,000 is having the highest call open interest. So that is going to be the resistance, but that is far. So before that, the first resistance will be 17,600 zone. And if you look at the put open interest, 17,500 is having the highest put open interest. So that is going to be the immediate support. And if you look at the change, as we discussed, that there is not much in the nearby strike. So at the 17,600, both calls and puts are added because now many people will be waiting for the further clue on Monday because there is extra holiday. So now let's have a look at the chart. Okay, so before that, if you look at today's data, today actually, uh, as we discussed yesterday, today we should wait for a dip, significant dip to buy, but that didn't come up. Instead, what happened? Market went to R1. There was call writing at 17,600. Okay, and there was some negative divergence. So we took a trade of no put. The short trade we took and booked around 20 points. So if you see here, let me see if I find that. This is the free Telegram channel where I keep updating about the views, etc. So if you see here, this was the trade taken. So 20th April, 17,600 put, took at 128 and exited at 149. Okay, and what was the logic? Logic was this. Okay, so if you let me remove the few of the studies, VWAP and volume. So I'm just keeping the pivot points. Okay, I think we have to keep the Keltner because I wanted to show you the divergence. So this chart might be looking a bit complicated to you, but it has basically two things. One is the pivots. Okay, so these three are central pivot range. This is R1, this is S1, this is S1, this is S2. Okay, apart from that, this is having the Keltner channel, which is 20 period moving average and 2.5 EMA above that, 2.5 ATR above that and below that. So if you see here at this point, okay, market went, and if you see this MACD, this is short term MACD that I use. So here MACD made a high of this, right? And again when market came down and went up, there was a negative divergence here. Okay, and if you consider this one also, initially it went here, came down a little bit, consolidated and went high. If you see this one also is a negative divergence. So idea was there could be a short downside to the market. So maybe a 20 point premium a spike in a ATM option of next to next week is possible. So that was the idea. So now let's have a look at the overall data, how overall chart, how it looks. So now market has closed above all this short term moving averages, right? 10, 20, 15, 200. So the trend has changed from down to up. Okay, so that is good for the bulls, and that way what we can do. Okay, so I got a request from one of the follower, like in the Telegram I update, right, what I did. So let's say for example today I updated that this is the new fresh trade that I have carried. Okay, sold 17,400 and 17,000 slash 17,000 put spread at 13, stop loss 30. What does that mean? That means I have sold this put 17,400 and I have bought the 17,300 put, and the difference is 13 when I took the trade. For example, here if you see, okay, this difference 17,400 is 24, and 17,300 is the closing price. This is 13. So 24 minus 13 is 11. So when I took the trade, it was 13. Okay, so that is how I update. I thought that is very obvious, but maybe for new people, yeah, it could be a bit confusing. So I generally take two kind of trade. Either I will take, put spread, I'd sold put spread, or I will sell call spread. So this is the bread and butter kind of strategy that I keep doing every day. Some of the other quantity. However, apart from that, focus is on other directional trades as well. So here, if if I've written that, sold 17,400 slash 17,000 put spread, that means this put, okay, 17,400 put is sold, and this is bought, and the difference was 13. What is stop loss 30? Means now when I sold this put spread, I sold 17,400 and bought 17,300. The difference was 13. Okay, so now if the difference increases to 30, okay, roughly thereabout, I'll exit. So that is the meaning of stop loss. Now, when I initiated the trade, the difference was 13. Now it is 11, so it is in 2 point profit. But let's say it would have increased from 13 to 15. That means it is 2 point loss. So that is how the credit spread works. Okay. So what is the plan for not tomorrow, Monday? Monday will be, see, if you see the pivots, it is coming 17,578. R1 is 17,656. So again, if we get a dip, 17,522 around, okay, so 17,500 zone, that would be a good buying opportunity with another 50 point stop loss or so. So now tomorrow, now we have 3 days, so let's see how global market reacts, etc. However, it is important that we keep checking the intraday data as well, okay, intraday chart pattern as well, to take any trade. So that is something that anyways we have to do. So this trade is based on whatever it looks as of today's close. If things change, we have to change the strategy accordingly. Yeah, that's all for today. Uh, Take care, trade well, and please consult your financial advisor. Yeah, and one request: if you find this videos useful, please subscribe to this channel, and please share this video among your friends. Yeah, thank you.